Today we have another fantastic guest with us. He is co-founder and CEO of Figure Markets. Appreciate you joining us. So you guys are doing some really interesting things when it comes to loans against real estate on chain, as well as collateralized loans against digital assets. And so maybe a little background and how you got into this space would be really helpful for people, and then we can hop over into that side.
Sure. So, before Figure, I'd started, co-founded SoFi and ran that. And one of the big challenges that we always had was, connecting sources and uses of capital efficiently. And the aha moment for me in early 2018 or late 2017 on the blockchain side was, this ability to represent truth over trust on a public ledger. And creating a native digital asset where I know for certain the ownership, the composition, the history, introduced three value props that resonated with me. The first was, the idea of taking structural friction out of transactions. So, when you think about loan origination and securitization, you have all this audit and QC process. Well, the immutability of a blockchain ledger reduces the size and scope of that, and saves a bunch of cash. The second was the ability to transact bilaterally real time. And so the ability to, effectively create two parties who face off directly and disintermediate all the stuff that sits in the middle. And so when we think about marketplaces, we think about the stock exchange. Well, there's seven parties that sit in between a buyer and seller, but more importantly, your debit card, and you swipe at a terminal, there's five parties that sit in between the buyer and seller. And so blockchain's ability to distill that down to two parties frees up a huge amount of economic value by eliminating a lot of rent seeking. But the last part, and the part that to me is the most interesting, is because you have a native digital asset, you can lend directly to that asset and get true perfection, right? I don't have to trust that the asset's sitting with a custodian. I don't have to trust that the borrower actually has the collateral. I get true digital perfection to it. And, I always draw the analogy, like, we've been lending against home value for 6 years now. Our credit's performed extremely well. But I've been lending against Bitcoin since 2020. I've never lost a dollar lending against Bitcoin, right? Because I have 24/7, 365 perfection of the collateral, and I can manage that. And, so the idea of taking native digital assets and being able to do direct perfected lending, to me, opens up a huge credit ecosystem that I think is going to be necessary because of some of what's happening on the stablecoin side.
Yeah, I completely agree. We've done probably about 10 million in loans against XRP on our side with the wealth management firm that we run with strategic partnerships, tri-party agreements, hold that in institutional custody and provide liquidity against it. And to your point, it's there, it's locked on chain. There's no counterparty risk. If you need to be made whole as the lender, it becomes very easy to do that. Whereas if it's real estate, there's a lot of contingencies there to be able to liquidate that property. You're placing a lien against it. There's just a lot of frictions there that make it a little bit more messy in that transaction versus just a true peer-to-peer lending, like you mentioned. So, what effect do you think the stablecoin bill specifically is going to have on this?
Yeah, so I think the Genius Act or whatever the permutation is that comes through has a huge amount of relevance. And in particular, if you think about payments and the fact that stablecoin really hasn't disrupted the payment ecosystem, it's primarily used as payment to transact in cryptocurrency and not buying coffee or paying your electricity bill. Um, a lot of that is because the payment infrastructure, in particular in the US, is very, very hard to disrupt. And unless you're a major bank, it's going to be hard to drive that disruption. And the major banks have had no incentive to disrupt anything because they haven't been able to issue stablecoins. And so what I anticipate happening is, you're going to have JP Coin, you're going to have, all these banks, but JPMorgan in particular is large enough to do this. They're going to lean in and start building transactional rails for stablecoin. And And, while the Genius Act prohibits the payment of interest, interest will still end up being paid. It'll be, in the form of rewards or
Mm.
points or whatever you
Like
may
credit
have.
cards with travel points and stuff. That's kind of how I see it playing out as well.
Yeah, exactly. And like Amazon will issue a coin and you'll get free Prime when you have Amazon, right? Whatever it is, the interest will implicitly be paid. And so the dynamic you have is, okay, if I can self custody my cash in this, and it pays me, effectively SOFR minus 25 or 50 or whatever it is, and I can go buy coffee, Bitcoin, and Tesla stock all with the same currency without having to move or transition off of anything. Well, why do I need a bank? And that expectation of deposit flight, the administration saying, hey, the stablecoin bill is going to attract $2 trillion into treasuries in the first year. And the Treasury actually put their own study out, said 6.5 or 6.6 trillion is going to leave the banking liability system and move into treasuries. Because the issue is the money comes from somewhere. So everyone's high-fiving that, oh, we have this huge source of buyers for treasuries. It comes at the expense of bank deposits. And well, go ahead.
What about foreign debt holders if they were to sell off their treasuries?
Yeah, I mean, you'll certainly have some of that, but the bulk of this is going to come out of bank deposits, and the U.S. is the largest market, and with legalized stablecoin, and with the banks offering this, you're going to get this huge transitional flow, and you'll certainly have foreign inflows in as well, and it certainly helps in terms of dollar dominance, but the dynamic is in 23, we went from 18 trillion to 17 trillion dollars in deposits in the banking system when the Fed initially tightened. And that caused Silicon Valley Bank to fail and First Republic to fail. And we had the capital markets were shut down for many, many months. And we're very active in those markets. And I can tell you no deals got done. So what happens if you have $2 trillion leave, right? Or $6 trillion leave? And what you're going to have, absent a solution, is a huge problem, because the market, you have to have some capital to come and step into that levered credit ecosystem that deposits previously financed. And that's where I think DeFi has an opportunity to finally have its moment in the sun, where you have the ability for people to take that liability out of the banking system, but then reapply it directly on direct bilateral lending and do much better for themselves and for the borrower, right? Because the sort of in economics we call it Pareto optimal, but everyone is better off because the bank as a capital allocator consumes a huge amount of rent. Like I get nothing on my deposit and you pay 12% on your loan, right? Well,
Large
in
gap there. Yeah.
in a DeFi ecosystem, I get now 6% and you pay 9%, right? Or whatever that is, because we're taking that overhead of the bank out of out of the equation. And so I think there's a huge opportunity there. And that's one of the reasons why, over the course of many years, we've accumulated billions of dollars of loans on public chain. We use Provenance and, we've got, I think, over $11 billion of locked loans on there today. And we're adding about 750 million a month today into that. And what we're now doing is bringing that onto DeFi applications, initially figure markets, where people can lend against those loans. And they're competing with the same people, the same institutions that lend against those loans, like Goldman and everyone else. And what we intend to do is take those loans onto other networks like Solana and Stellar and others, where they can feed those DeFi networks as well. But the goal is to use our credit as a catalyst for this and demonstrate a roadmap where other credit will come in behind us. And the benefit of perfected lending, especially when you stand up an AMM or some kind of liquidity for the assets that you're lending against, is you don't have to look through to the borrower, right? You're not underwriting figure, you're underwriting the collateral and your ability to get your money back if there's ever a default or miss a covenant. So we're pretty excited about this, and we think, the unintended second order consequence of the stablecoin bill, which is pressuring bank balance sheets, provides a phenomenal opening for DeFi and for the development of a better way to finance credit.
Yeah, I think you're absolutely right. I think there's going to be a explosion of the use of a lot of these technologies. And I think the banks know that they are going to be disintermediated and potentially have, a lot of interest in this space. So what's the long-term goal for figure markets? Is it you looking to go public? Is it an acquisition? Is it to obviously you want to be a leader in the space with how you positioned yourself, but what does that look like?
Yeah, so if you look at how we started as a loan originator. We were the first to originate consumer loans on public chain back in 2018. Ave would say that they were the first, but I would argue that we were. Very quickly we migrated from an originator to a marketplace operator. So we now have over 150 third parties that originate using our technology, loans on Provenance blockchain, and they feed into a marketplace that we run, where we have significant amounts of institutional capital in there. So we have all the big sell side banks and the largest buy side firms that are participating there. And we did an announcement in February that we stood up this permanent capital guarantor that was financed by Sixth Street, where we're effectively creating a Fannie Mae Freddie Mac alternative, but on blockchain, right on public, on Provenance. And so, you can kind of look at our journey and say, well, in the beginning we were a loan originator. Well, then we were a technology purveyor. Then we were a marketplace operator. But if you look at what we've done in the last 12 months, I think it gives better visibility to where we're ultimately trying to go, which is, in February, we went effective with the first SEC registered yielding stablecoin. So we have a public fixed income security that's freely transferable peer to peer, that pays interest, pays SOFR minus 50 basis points. And so we are also one of the catalysts of this migration of bank deposits. But on the other side, what we announced yesterday, or a couple days ago, is moving figure loans into a DeFi platform where people can lend to them, and we'll have a fast follow on that with an AMM where people can trade them. That is ultimately what we see as the value, and we call it democratized prime. And it's not that we're just going out to the 2.5 trillion that lives in the prime brokerage ecosystem. We think this is a $25 trillion ecosystem. We think it's just a massive, massive opportunity to not just provide alternative financing, but finance stuff that wasn't financeable before.
Right.
And so that's ultimately our end game. And we built a very profitable business in doing this along the way. And yeah, we absolutely have aspirations. Certainly after Circle's IPO yesterday, we would hope to have the same kind of market enthusiasm on ours, and hope to be going public in the near future.
That's incredible. So let's walk people through an example here. Let's say I've got some money I want to put to work. Okay, and I come over to Figure Markets. You guys accept different stable coins. I assume on the other side of the stable coin bill, you'll be able to collateralize, whatever they're bringing, whether that's JPMorgan's coin or Amazon's coin, whatever it is. I've got, let's say I've got 5 million that I want to put out there and put to work in the market and private credit. Um, and so I'm going to put that up. Um, and somebody's how does that work? What does that look like?
Yeah, there's two ways you can do it, and one is, you would come in and you might want to buy yields, which is our yielding stable coin, just so that until you deploy that capital, it's paying you interest, so you don't have any cash drag on it. But you could hold it, in USDC or USDT. And we have, within Democratized Prime, various markets that you can go lend to. So all the margining on figure markets, when I buy Bitcoin, I can get 5-to-1 leverage. That leverage is financed by the community, right? People are putting that cash up to do that financing. And so you can go and look and say, okay, I want to lend against Bitcoin. Current market rate there is 10%. And so the way that Democratized Prime works is it's a Dutch auction. And so you'll say, look, I want to lend $5 million at 10%. Well, if the borrowing went through that up to 11%, right, or whatever that level is, everyone gets the highest rate. So even though you wanted to lend 5 million at 10, you'll actually get 11. And so that way you don't have to worry about, hey, did I come in too low? Everyone's getting the highest rate. So if you look at the figure loan market right now, it clears out at about 9%. There's a bunch of money under that people are willing to take 8, 7, 6, even 5%, but they're getting 9 because the borrow is all the way up to 9. And what we intend to do is keep adding assets as capital's coming in because we want that rate relatively high. We want people excited about that and enthusiastic to participate. And we've got $11 billion of assets to move over, right? So got plenty of powder to do that. And then it's hourly. So if you want your money back, you issue a redemption request. And if for some reason there isn't liquidity to redeem you out, the rate goes to 30% until you get your cash back, right? And what that's doing is it's incentivizing the borrower to delever, but it also incents more capital to come in because we have a bunch of hedge funds that monitor this. And when they see that, they'll say, okay, I'll lend at 25, right? I'll lend at 20 or whatever the number is. And they'll come in and effectively provide capital until it normalizes back to where the market is.
No, that's fantastic. So let's say I take that position. I have some representation of value of my participation in that ecosystem that I'm then able to hopefully trade on another market if I chose to do so. Is that the kind of the premise here? Or
Yeah. So one of the things about figure markets is it's a decentralized custody marketplace. Because we felt after FTX, centralized exchanges have lots of flaws, and that demonstrated one of the big ones. And I'm still amazed that the centralized exchanges still dominate the crypto trading regime, but there's reasons why they do that. We use what's called multi-party computation wallets that keep the assets on the native network. So when you're lending against Bitcoin, you're lending against Bitcoin on the Bitcoin network. It's not wrap Bitcoin. It's not representative. Right?
yeah.
That's right. Um, yeah. You're lending against these assets, and, to the extent that you wanna take your cash off, convert it, into whatever you wanna convert it. You can convert it to Bitcoin, you could take it off as fiat, you could take it off as stable, you could take it off as yields, you can do that. And so, the intent is to have and XRP as well. The intent is to have interoperability there so you can get easily on and off. Uh, and, what this is what I would call is a more refined way of providing yield. Right. And you think about all the permutations people go through in staking today, where a lot of people don't understand what's actually happening. They just know they're getting some yield off of it. This is pretty straightforward. I'm lending against mortgages.
Yeah. So I guess the crux of my previous question was like, well, it kind of led to this. Do you foresee a situation where you guys package these up and collateralize debt obligations and sell them off to pension funds or annuities or other people that need reoccurring payments? And maybe there's a premium for the people that finance that to begin with?
Yeah, so we do that, and you hit a great point, which is today we have a bunch of warehousing, and so when we originate assets, we put them in these warehouses, and we aggregate up to we have $500 million of loans, and then we securitize them, right? And we do AAA rated securitizations, and we sell that into the insurance companies and others. And what Democratized Prime is doing in the first step is competing with the warehousing. Right. So, and what I'm doing is I'm going to Goldman and others and saying, look, I don't want a bilateral warehouse agreement anymore. I just want you to do it here. And so if you put capital up, you would be competing with Goldman and everyone else, right? Or participating with them in that allocation structure. And to me, that's the logical migration of this.
Yeah.
Now, the thing is getting the street to embrace public blockchain is always a lift.
Yeah.
But I've been able to do it. And a great example of this is I used to, as part of warehousing, what I would do is I'd send a spreadsheet to Goldman once every 5 days, and they would have a bunch of loans on it, and they'd give me a bunch of money against that spreadsheet. And then they'd spend 5 days figuring out if I was lying to them or not about any of those loans. And, I kept saying, look, if you use blockchain and you use this thing they have called DART, which stands for Digital Asset Registry Technologies, it's built on Provenance, and it does this UCC Section 8 perfection to the asset real time.
Audit it real time.
And it's all audited, right? And I'm like, everything that's there when I give it to you. And they're like, oh, public blockchain, we're worried you're going to steal our loans or, blah, blah, blah. And I'm like, it's just a demonstration of education, right? And so we finally got them comfortable enough to do it. and they realized that, hey, we don't have to pay a bunch of people to do 5 days of work to figure out if you're lying to us or not. But not only that, we can get your money sooner because we know what's there, and the sooner we get your money, the more we get paid.
Right.
And so,
Interest is accrued. Like they're
yeah, so the light bulb went off that we'll make more revenue, we'll reduce our costs. Why haven't you told us about this earlier? And I'm like, I've been telling you about this for years, and so now this is, they prefer and in fact sometimes demand that this is how we deliver loans. So we don't do it the old way anymore,
that's
right?
awesome.
And so it's an educational process, and the thing is the blockchain introduces so much efficiency and so much value add that ultimately, TradFi will completely migrate into it. It's just, you have to help them along the way. And the problem in the blockchain space is, our industry never loses an opportunity to shoot itself in the foot and scare the TradFi people, right? We had the ICO debacle and the NFT debacle and FTX and, the recent hacks and then the meme coins and,
Yeah.
you know, all this stuff. And it is difficult when I sit with the compliance people in these banks and they say, "So you want us to use the same platform that Fart Coin's on?" And I'm like, "Well, there's nothing wrong with Fart Coin. But it's a different thing." But it's an education process, and I think as they learn, they realize that they make more money, and ultimately they're economic beasts, and they lean in and do it.
Yeah, it just creates more efficiencies for them. They're able to get money faster, velocity of money picks up, there's reduced costs, reduced frictions. Yeah, it's a no-brainer for anybody that actually is in the space and sees the benefits of this stuff, but to your point, I don't know, it I think educating them is probably the nicer way to say it. I was gonna say ignorance of a lot of people that just have, and this has been portrayed a certain way, and to your point, there's been a lot of problems, that would cause them to hesitate to use this technology because of people have lost a lot of money. So, yeah, what do you think on a time frame? So we got the stablecoin bill. I think that that's gonna pass here pretty quickly. Do you think it's gonna require the Clarity Act, for them to get really comfortable to actually to implement these technologies? Or do you think stablecoin alone will allow them to lean in?
Yeah, stablecoin alone will allow them to lean in, but they're working on a market structure bill as well. And that market structure bill, I think, will answer a lot of questions for folks. I think with the change in the administration, what's happened is we've lost the major headwind, which was the SEC using enforcement as a policy tool. And but we've not gotten the tailwinds yet. And so, the stablecoin bill could introduce those tailwinds. The market structure bill could introduce those tailwinds. And so I'm optimistic that, we will have progressive legislation to help with the industry. But just losing that headwind, I look at Figure, for example, and Figure's done over $50 billion of public blockchain transactions in RWAs, by far the largest in the market. And now is bringing all this collateral over to build a profitable company. We did all that in 4 years of very difficult regulatory structure. And so, if we can just lighten that up a little bit, we're going to fly for the next 4 years, right? And you're going to see huge, huge innovation, not just from us, but from the broader industry in terms of public blockchain.
Yeah, so, I was doing some research and found that to be true, what you just mentioned there, and put out a video not too long ago about that topic and different blockchains that had traction in different spaces. Um, you guys have a token associated with Provenance, which is hash. Um, nothing here is financial advice. It's for entertainment, educational purposes only. Always consult with a financial advisor before making any investment decisions. But if they wanted to go, learn more about what you guys are doing, or purchase the token, how do people do that?
Yeah, I mean, you can learn more about Provenance at provenance.io. And at least I think that is. And pull it up real quick and make sure I got the right URL.
You're good.
Yeah, it's provenance.io. And if you look at provenance.io/pulse, you can actually see what's on the blockchain right now. You can see the total TVL, the number of transactions, stuff that's moving around. It's actually a pretty cool dashboard. And then, as you said, hash is the underlying utility token. And my investors initially got really upset at me that I called it hash, because they said it's going to cause even more angst for the banks. And, we used to have this structure, and we still do, where certain transactions burn hash, and I'm like, but then we can say smoking hash, and that's, and so we kept hash, and I'm happy about that. So right now you can buy it on Figure Markets and you can buy it on Osmosis. Juno, who recently became the head of the foundation for Provenance, is working on some major centralized listings as well, to get it out there in the public domain. We've not spoken a lot about it historically because there was no benefit from a regulatory standpoint. We had to do a lot of stuff with the SEC from a licensing side. But we're at a different point where June's now leading in and really starting to tell the RWA story on Provenance, which is huge.
Yeah, so what was the total again for people with the real world assets that you guys have tokenized on chain? You said 50 billion or
So
what?
we've done 50 billion of transactions. It looks like we've got 14.5 billion today on Provenance. Not all us. There's some other stuff as well. I think our loans are around $12 billion right now on Provenance. And we're adding about 750 million a month. But yeah, there's been a lot of noise in the blockchain space, but some of us have been building and doing a lot of really creative stuff and making a lot of headway. And I'm excited, as I said, about the next 4 years with a little bit of, as I said, just getting rid of the regulatory headwind. We're going to be able to fly.
Yeah, I think so too. So do you guys have a foundation that helps other people develop on chain if people have interest in that?
Yeah, Provenance does, and one of the interesting things about Provenance is, we have yields, which is a way to get money on and off the blockchain, and in the form of a yielding coin. There's broker dealer structure on there for securities. There's a bunch of infrastructure, but there's also a bunch of institutional participation on there. And so like Infinio had built, has done their life insurance structure on there. There's a lot of folks that are starting to build on it. There's a home equity participation platform that just started building on there. And it's a good place for traditional financial applications on Web3.
Yeah, it sounds like it. It sounds like you guys have done a lot of work to be progressive and make sure that the regulatory compliance is in place, so that people can participate and know that it's a qualified way to do it. Um, do you anticipate integrating with any traditional custodians? You guys think you'll just stay with the decentralized framework that you currently have?
No, no, we do work with a lot of the custodians. Right now with yields, we're doing integration into BitGo, Anchorage, Fireblocks, Copper, all the traditional backend folks. And I used to have the view that one blockchain would win it all. I don't have that view anymore. And we're gonna have lots of chains, and interoperability is key. The custodians play a role and a necessary role right now for funds, for example, that need a qualified custodian. So while I'm more of a purist in the construct of decentralized custody and control, I certainly recognize that you need centralized custody and control in lots of circumstances. And so, we're happy to work with our custodial partners.
I love that, man. Yeah. So this has been great. Just want to thank you again for coming on the show and sharing your time with my audience. If people do want to reach out, I know you mentioned a few places earlier, but what's the best way for them to do that?
Yeah, so you can go to figuremarkets.com, you can go to figure.com, you can go to provenance.io, and then I'm on Twitter, mcagney, Telegram, mcagney. I'm pretty easy and accessible.
Awesome, brother. Well, thank you again for taking the time, and hopefully you guys got some value from this. Let me know what you guys think in the comments below, and we'll see you guys on the next one.
Thanks for having me.